Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by putting together these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong monthly demand and support area. From here, multiple rejections to the upside have been created. And what we can see is that every single time that the market tested its zone, it followed with a quite strong push to the upside. And what we can see is that as the market just tested this level once again and rejected it to the upside, in a situation like this, we could expect more bullish continuation to be created, as the market has already created in the past when it tested and rejected this level to the upside. So from a monthly standpoint, everything seems quite bullish. Now, dropping down on the weekly time frame, what do we have? Well, from a weekly standpoint, first of all, we have to identify how the market, in creating this push to the downside and correction, has been creating this weekly M pattern. In fact, starting from here, we had a push higher, retracement, continuation to the upside, and now the market is pushing lower, effectively creating an M pattern. Now, generally speaking, after the creation of an M pattern, you would expect the market to create a push higher, completing the M pattern at the neckline, which is the previous support turned resistance from a weekly standpoint. So here on the weekly time frame, there is definitely a possibility to see a potential push higher, completing this pattern at the neckline. So this previous support turned resistance here from a weekly standpoint. We can also notice how all this level here is actually a quite important demand and support area for this market when it comes to the weekly time frame. In fact, it was testing its previous resistance here, preceding this rejection to the downside. Then we had the break above that zone. And as we know, previous resistance, once it is broken to the upside, becomes support. The market tested the level as support, rejected it to the upside. And at the moment, the market is approaching once again the exact same level with the creation of the M pattern. So there is a possibility to see a test of this demand and support, and then a rejection to the upside, completing the M pattern that we have just identified here from a weekly perspective. Dropping down the daily time frame, what do we have? Now, here in the daily time frame, the price action is quite clear. First of all, what we can notice is that in creating this move to the downside, the market was creating this M pattern. And in fact, after the creation of an M pattern, you would expect first the completion at the neckline and then the continuation lower, as we spoke about also in the previous analysis. And in fact, that is exactly what the market just did. After the M pattern, first it completed at the neckline, and now it seems like it wants to push lower, which is what you would usually expect when the market creates such pattern. And what we can notice is that from a daily perspective, this level here is quite important structure. Multiple times the market tested its zone and rejected it to the upside. So if the market will now push even just a little bit below the level, there is a high probability that a lot of stop losses are placed below these lows, especially below this low here. So if the market will now go and trigger all those stop losses, essentially institutions would have the liquidity after the stop hunt to create the push higher. Because always remember that for every seller in the market, there needs to be a buyer. For every buyer, there needs to be a seller. And if institutions don't have enough liquidity at every specific moment to position all their orders, they have to create that liquidity. And stop hunting is exactly what creates that kind of liquidity, because when stop losses get triggered, essentially those stop losses create the liquidity to the opposite side. So those are sell orders that give the possibility to institutions to buy those sell orders and fill their orders. And at that point, we could have the possibility of getting a push higher, completing that weekly M pattern. So if the market here will continue a bit lower, there is definitely the possibility to see some institutional buying inside of this zone, which at that point would further increase the probabilities of a potential push higher away from this level. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing, and we check the data precisely for the GBP, the first thing that we have to keep in mind is that if we're checking the data for the GBP, we're actually already checking GBPUSD, because all currencies on the spot are traded against the USD. And if we check the data here and see what institutions are doing, we can see how they went from having a negative net positioning of minus 27.7k net positions with having way more shorts than longs, 80.5k shorts compared to only 52.7k longs, all the way up to now having a positive net positioning of 50.4k net positions with way more longs than shorts, 90.5k longs compared to only 40k shorts. So clearly institutions have been moving to the bullish side for GBPUSD. And by the way, guys, before we jump back to the technicals on the daily time frame and continue with the analysis, make sure that you join the free Telegram channel. The link is also in the description and also here on the screen, so you never miss new updates. Now, continuing with the analysis here from a daily perspective, if the market will go and test this demand and support area, at that point, what I would expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish market to an intraday bullish market during this push to the downside, at that point I wouldn't be surprised to see a potential push higher, completing that M pattern that we have identified from a weekly perspective. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I'll see you in my next breakdown.